You're tuned in to Agriculture Today, and we start our Friday show with a grain market update and also hearing what the USDA report showed from K State grain economist Daniel O'Brien. Daniel, thanks for joining us today.
Thank you very much, Shelby.
Daniel, wanting to look at our current grain market first, and what are we seeing for futures?
Well, yesterday we had a little bit of an up day, and it's really kind of a continuation of sideways to a little bit positive response out of the reports that happened on September 30th, the end of the month, and so we closed December corn at 421 and three quarters. So we're settling into this range of 413 to 425, something like that for D's corn. And really, with harvest approaching speedily, if not happening already in parts in the more southernmost parts of the state, wet corn already going out in the western two-thirds going into feedlots. We're in the midst of harvest, and on the future side, it seems like we're loath for D's corn to go far below 410, 415, something like that. So we'll see if that holds once we get into the depth of things. And then we have some positive carry still in the corn market from D's at 421. You go to March at 438, May at 447, July at 454, and September 464, 459 for next harvest. When again we don't know a lot about what that's going to be, but that kind of shows you where the market's neutral is. Again, next year 454, for about around 450 until we get some information. And so some carry there, not enough sharp carry to reward storage on paper. And we had a set of ag lenders meetings this last week, and the issue of storing grain versus selling it was one of the main topics that we talked about. Again, the fall harvested grains, and especially for corn, we're looking at how these carrying charges are not fully covering the cost of carry for on-farm storage, 2.5 cents a bushel per month, assuming about 5 cents interest. But the one thing I'd keep in mind is that right now, if you look at the futures market at any time, it's basically showing about a break even or so, just a so-so return to storage, unless you really get into a volatile time. So I don't think that the issue of sales now versus storage will really be. I guess the outcome of that's not going to be determined until we see what happens to usage, et cetera, in the coming month or so, and then there'll be even tougher decisions to make. For soybeans, we closed actually have shown some strength in soybeans coming out of those Tuesday reports. November closed at 1022 and a quarter, up 9 cents, over nine. January 1040. We've got a little bit better carry in the beans. Again, from November to January, about almost 9 cents carry, about 7 3/8 from January to March per month. January to March per month, about six or so. And again, that in general, I don't know that many people store beans on farm, and we tend to move beans pretty quickly. So we're hanging around. Again, 1022 for November of this year. Next year, just to see where the market uh, invests itself when it doesn't know what size the crop or anything's going to be. November 26 is 1068 and a quarter. So right now we're about 46 cents below where neutral would be, i.e., for November of 26 compared to November 25 for the soybean contract. And for wheat, we've been struggling without question. It's an odd conundrum in a way, in that we've got cash wheat prices. Pardon me. The futures prices up front for the upfront contract. D's 25 now at below $5 at 498 and a half. July harvest of next year 549 and a quarter. So about 50-cent differential again. At kind of a familiar number from where we're at right now with our lead contracts versus next year's harvest. So you get just so prices, cost of production for a lot of Kansas budgets, $6 plus, 650, something like that. If you have more so to the west, if you have a fallow period in there. So uh, these are price levels that a lot of lot of producers probably aren't being encouraged by with regard to that, and we're seeing those right now during the time when we're making decisions on seeding wheat or having done so already. You look at the cash markets; they're similarly reflecting harvest issues. Harvest pressures is a polite way to say it. The only cash corn price over $4 is that the top bid that I'd seen today, pardon me, yesterday in Southwest Kansas around the Garden City area, about $4.17. Top bids beyond that, really Pittsburgh at 392, 382, Topeka, Colby, Hutchinson, 372 in Salina. So nothing great to speak about. And for both corn and for grain sorghum, with grain sorghum bids being, say in the Hutchinson area, we had the top grain sorghum bid at $3.57. All other areas of the state down at least 10, 15, 20 cents from that for the top bids. Basis bids for both corn and for sorghum tangibly suffering, but again, we're in harvest, and the real story on that will be what happens coming out of harvest thereafter when we deal with really some concerns probably about storage space at local elevators. Soybean bids, again, the top bid in the state, $9.64 in the Hutchinson area, and in looking at those, you had one or two elevators, terminals having strong bids, and others coming in later, coming in lower. 959 Topeka, 952 in Pittsburgh, southeast part of the state, 949 Salina. So nothing great there. But then you go out to the western part of the state to look at wheat bids there. We've got some wheat bids, well, in both the northwest and southeast corners of the state. Top wheat bids are below $4. Pardon me, below $4 in the Pittsburgh area, southeast Kansas. $4.90 for pretty low for northwest Kansas, and then better bids. Actually, top bid in the state. For wheat, about $4.54 in the Salina area, $4.49 Topeka and Hutchinson. But that's probably not the bid or the price that farmers considering sowing wheat this fall are looking at for winter wheat. You see new crop bids, top one in the state, $4.95. This is for June, July of 26 as a contract price. So top bid there, Colby, $4.80, $4.80 in Garden City, $4.80 in Garden City, $4.75 Pittsburgh. Surprisingly, almost in the Hutchinson area, with pretty strong wheat area for the U.S., we're at $4.44, $4.54 in Salina. So interesting around the state. Not a time when farmers have a lot of enthusiasm for these cash bids, but we're seeing that the other shoe drop from having pretty successful supplies of crops, and we still have uncertainty about where final yields will be. And I would say just quickly on that uncertainty is probably going to be extended, or very likely to be extended if the government shutdown that affects the USDA were to cancel or at least temporarily for 1 month not present an October 9th USDA NASS crop production or WASDE report. So we'll still be watching all sorts of harvest reports, et cetera, but we won't have an official number then until probably if this October 9th report gets canceled because of the government shutdown, then we're looking to see, well, do we do it in November? And so that put a lot of pressure on that November set of USDA reports.
And Daniel, while we're thinking about those USDA reports, recently we chatted about the small grains and quarterly stocks reports, and those came out on September 30th. And what did you see?
Standing back and seeing what of consequence came out of those for the corn market, the USDA did go back and raise the 2024 corn price a little bit and chop back by about 180 million bushels the feed residual number. They just put it all in residual, but it's mainly feed and residual. So that will affect the beginning stocks of corn coming into this current marketing year, raised them uh, well, again, about 200 million bushels by the time you look at the balance sheet that they put out, or adjusted balance sheet. So that will add to supplies, make it a little bit tougher for prices to move to the high side. But again, it's not the beginning stocks that are the issue; it's the size of the crop. So we'll be watching whenever we can get good numbers, the actual U.S. corn yields, and we'll be watching also the soybean yields. The soybean number. Also reflects some change that happened in the 2024 USDA crop size indicators, and that and the stocks reports together. So basically, an increase of about 16 million bushels, up to about from 300 million that the USDA had been projecting for the September 1 or beginning stocks for this current marketing year. So point being that not a lot of changes that are of consequence. We're still the big issues will be size of this year's crops, and then for the wheat side, just interesting that in for we had seen increases in all U.S. wheat and in all winter wheat. Estimates from the USDA: hard red winter up tangibly, soft red winter up. And other spring wheat also up, no change of consequence in durum, etc. So there's really nothing in that set of reports that shaved down or tightened supply demand balances that would lend much support to the markets. The big issue will be again once we get thoroughly into the fields and find out what the corn crop is, what the soybean crop is, then we'll here in the U.S. Then we'll eventually be able to rectify uncertainty in those balance sheets and see where the markets take us. It right now looks like a storage market, and that's no surprise to anybody with the large crops. But we'll see. Again, the best cure for low prices, of course, is low prices. Although you suffer through them at the beginning, but eventually they bring about change, bring about increased usage, and we've seen that actually on the corn market to some degree. So we'll be watching for that. I think we're also watching closely what happens in the trade negotiations between China and the United States. If that could come out positively, and China, if China would be able to would re-enter the U.S. soybean market and possibly the grain sorghum market, that would be a welcome reprieve for both those commodities in these markets.
Daniel, I appreciate you taking the time to join us.
Thank you very much, Shelby. Take care.
That was K State grain economist Daniel O'Brien. We're cutting to a short break now, but we'll be right back.